this conversation on Business Redefined. As always, our last episode of the year focuses on the taxation review as well as the new taxes coming in the new year. And why we do that is because if you look at the structuring of any finance act, there are those tax measures which take effect immediately. The financial year starts us in July, and others which start mid-year, that's in January the next year. And we are delighted to have Edna Gitachi, Tax Policy Lead at PwC. Karibu sana.
Thank you for having me on your show.
Karibu. So let's start, Edna, with a review. Some of the emerging issues we had this year. One of the main ones is that finally we had the Court of Appeal pronounce itself on matters regarding minimum tax. What was your take generally on the judgment?
So, Julians, you will notice that there were some fundamental problems around the design of minimum tax. There was consensus between the High Court and the Court of Appeal on some of the issues that were not in line with the Kenyan Constitution. So, for instance, the two courts did agree that minimum tax was going to place an unnecessarily heavier tax burden on certain loss-making entities as compared to others. A good example would be, you have just started your business. You've not been able to break even, and you're subject to minimum tax. So that is going to be an unnecessarily heavier burden than a business that is already profitable. Another one would be businesses that are low margin. They actually depend on volumes for their profits, but they would also be subject to minimum tax to the extent that if their tax is not equal to 1% of their gross turnover. So this was going to create an unnecessary burden for them. Again, there were arguments that minimum tax was introduced to fight tax evasion. And it would also be very unfair to put in the same basket innocent taxpayers who are in genuine tax losses vis-a-vis tax evaders. So the two courts had agreement on that. So what I see going forward, if you are to then just benchmark with other countries, around the definition of minimum tax, it's extremely, extremely narrow. So very few taxpayers fall into the category of minimum tax. So one of the things we need to rethink is how do we align our taxes with the Constitution? Okay.
Still on the issue of minimum tax, one of the areas where we saw divergence between the High Court and the Court of Appeal was on this issue of the supposed double taxation. And the argument has been leveled that maybe that signals a potential window for resurgence or reintroduction of the conversation around minimum tax, possibly through the Finance Act that we are now expecting for the next financial year. Do you see that happening?
I think, Julians, before we even talk about reintroduction of minimum tax, as I had mentioned earlier on, we need to align the policy design with the Constitution. The issue of double taxation was just one of the issues that was highlighted. But as earlier stated, there were quite a number of issues that were contrary to the Kenyan Constitution. So I think what needs to be done is to first of all review this vis-a-vis the Constitution to be able to see whether or not we should have minimum tax. If you look at minimum tax design in other countries, it's actually very few taxpayers fall under the bracket of minimum tax. For instance, I talked about the new businesses. For these new businesses, if you're in a loss position for consecutive years, a number of consecutive years, that's when minimum tax kicks in. But the design that we had was that minimum tax would kick in almost immediately, which was going to be very unfair. And again, minimum tax was designed as a turnover tax. What this would mean is that businesses would pass on this cost of tax to their customers, and it would inevitably drive the cost of doing business up. So it's not supposed to be designed as a consumption tax or a sales tax. Ideally, it should be a profit tax. Because it is anchored under the income tax, taxation should be on the profits and not turnover.
I see. Quite spot on there. Speaking about the policy design, policy framework, another major development this year is that finally we saw the draft national tax policy. Looking into the next year, what are your expectations in terms of how we push this envelope further?
So the first thing that I expect is that the new government is quickly going to review the policy that had been designed by the previous government, align that to their manifesto, and then this should be released to taxpayers. One of the challenges that we have had in the country is that the taxpayers have no certainty when it comes to tax measures. So right now everybody is speculating whether taxes are going to be increased, and maybe that's why you're asking me whether there'll be the introduction of minimum tax or not. But if we have a tax policy, then it would be clear what taxes are going to be implemented and for what period of time these taxes are going to be implemented. So I'm hoping that we are going to have the national tax policy, the final one, released to the public.
Okay. Another major thing, the migration to the tax invoice management system. We saw 2 extensions, and finally, November 30th, KRA said there is no further extension. How do you think that panned out, looking at how it was executed?
I think there were some positives and negatives. A number of taxpayers were able to comply, especially the mid-sized taxpayers, but there were challenges, especially with the large taxpayers in the retail space. Some of these challenges are still being addressed by the Revenue Authority, and we are hoping that in the near future, they shall be able to onboard everybody who had to make sure that everybody is compliant with TIMS.
We have seen the performance for the first 5 months of the current financial year. I think in the latest month we saw a collection of about 150 billion shillings. Cumulative for the 5 months is 758 billion. It looks to me like this might be a challenging year for KRA to hit its revenue target. Do you share that view?
Yeah, so Julian, if you look at the first 5 months, the year-on-year growth as you compare this year, 2022, July to November 2021, there's a growth of about 10.2%. But having said that, we still have a long way to go to realize the targets for this country. So KRA would have to work very hard to be able to realize the targets that were set for them at the beginning of the year.
Okay. And do you feel that the election significantly dented the performance, or how is this evolving vis-a-vis other election cycles?
I think if you are to compare with, say, 2017, which was a previous election cycle, we had 2 elections for the president, and this dampened the business environment. There was a slowdown in economic activity. But this year we only had 1 presidential election. So the impact was not as much as it was in 2017. So I would expect that the outturn would not be as bad as it was in 2017.
Okay. And let's switch gears and now look at what we are expecting in the new year. First, we have the conversation around capital gains tax from 5% to 15%. Let's begin by helping us understand who is affected by this.
So you're right. So capital gains tax, the rate is going to go up from 1st of January from 5% to 15%. If you're disposing of property from 1st of January next year, then you'll have to apply the new rate. Some of the property that is subject to capital gains tax would be unquoted shares. You also have land and buildings. So these are the category of transactions that are going to be affected.
For the avoidance of doubt, shares in the stock market, are they affected or are they not?
No, they are not affected. Those ones are specifically exempt from capital gains tax. So these are unquoted shares. So if you have privately held shares that are not quoted, then you'll be affected.
Okay. There has been so much concern around the fact that we don't seem to have guidance around indexation, even as we talk about capital gains tax. Just help us understand why that is important and what Kenya can do going forward now that we don't have it in place.
Yeah, so Julius, before I even get to the issue around indexation, I think one of the consequences that we are likely to see at the beginning of next year is that a number of people are likely to start rethinking their disposal transactions. And this is because of the significant increase in the rate, and coupled with the fact that, as you mentioned, we don't have an indexation allowance. So indexation cushions taxpayers from paying taxes arising from inflationary gains. So we just want to pay tax on the real gain. So Kenya does not have an indexation allowance. If you look at other countries, they have an indexation allowance, and this cushions the taxpayers from paying taxes on inflationary adjustment, because this inflationary adjustment is really not the problem of the taxpayer, so they should not be penalized for that.
Do you see potential capital flight resulting from this bump up from 5% to 15%? Naysayers have said, look, the region is hovering around 20%. Why is Kenya complaining about 15%?
Yeah, you see the difference between Kenya and the region is that there's indexation allowance. So even though the rates are slightly higher, then they're cushioned against paying taxes from an inflationary perspective. So how do I see this panning out from a business environment perspective? As I earlier said, in the short term, a lot of investors are going to rethink their transactions, and this is going to create a liquidity gap in the market because not everybody wants to dispose of their property because of this tax. But in the long term, once we have indexation allowance in place, I think all the transactions, or anybody who wants to dispose will then go ahead and dispose and pay the right CGT rate at 15%.
And one of the things which has dominated conversation ever since the new administration came into office is the subject of wealth tax. And I remember the president stating in his inaugural speech that we overtax trade and undertax wealth. And this government will bring proposals on how to tax wealth. Let's start from here. How does wealth taxation look like? I'd imagine CGT, for instance, already captures that.
Yeah, so Julian, let's start from defining what is a wealth tax. As the name suggests, it is a tax on the net worth of individuals. As a country, we do have a form of wealth tax. If you think about it, the property rates that are paid to the county governments, you pay them because you have property. And the rate depends on the value of the property and also where the property is situated. If you think about stamp duty, at the point of acquisition of a property, then you also pay stamp duty. So this is a form of wealth tax. And wealth is manifested through income. And all incomes are subject to tax, be it business income, employment income, rental income, all of them are subject to tax. Capital gains tax, as you talked about, is also another form because at the point of disposal of your wealth, then you also have capital gains tax kicking in. So looking at other countries, very few countries, by the way, have wealth tax. And one of the challenges that wealth tax poses is that individuals are not able to accumulate wealth. Having wealth does not mean you have cash flow. So it means that in certain instances, one may have to dispose of their assets to be able to pay the taxes. And this poses a challenge of capital risk, capital flight risk. So I think we'd really need to think through it and also look at if we tax wealth, what would be the resultant collection? These countries that have wealth tax have very low tax collections arising from this.
I see. You've raised a very important point that having wealth doesn't mean you have cash flow. It reminds me of cases where you're asset rich but cash poor. Tell me, an idea has been mooted, and this country has thought about this before, the issue of taxation of idle land. And how would this look like?
I think that would actually be a challenge. Just as you're saying, having idle land does not necessarily mean that you have cash to pay the tax. So if we are to introduce tax on the idle land, we'll see a lot of disposals of the land because people would have to dispose this to pay their tax liability. And people would also be afraid of investing in land because they might not have the money to start making good use of the land immediately. So we might be inhibiting economic activities around that.
Is there a place where we can say a market which can give guidance in terms of best practice on this, or we have none?
I haven't come across any, but it would be good for us to benchmark on that.
Okay. Another issue which has been raised around this issue of wealth taxation is potential inheritance, or a taxation of inheritance. And of course, Kenyans are asking, how do you even begin tracking that? Yeah.
You know, the issue of inheritance is so complicated, Julian. You don't want to make it more complex by introducing another angle of tax. And there would be issues around valuation of this inheritance. Yeah. You have just acquired it, but you have not made any use of it. Maybe we need to wait until there's any appreciation or any gain arising out of the inheritance before we can subject that to tax.
I see. Another major thing, Edna, in 2023 is the taxation of financial derivatives. How is this expected to work? Because in my understanding, the financial derivatives market in this country is so shallow. I wonder what exactly we're taxing.
Yeah, so let me start by explaining what are these financial derivatives and what is the rationale for them. So businesses use this as a risk management tool. They want to mitigate against the risks arising out of volatility of the global markets. For instance, the global prices, say for fuel, have been changing every so often. A business that is engaged in such, that is trading in fuel would want to hedge against this risk. You also have interest rate risk, foreign currency risk, among other volatilities that are there in the market. So businesses get into these transactions so that to create a level of predictability of their businesses and maximize their profits. So what typically happens is that a Kenyan business would enter into this hedging transaction, say with a financial institution in the country. Both of them are resident. So both would be subject to tax here under the normal corporate income tax. But in the past, we have not had the non-residents subject to tax. So what the Finance Act 2022 was seeking to do was to increase the ambit of this taxation of financial derivatives to include the non-residents. Now the challenge is, how then do we tax these non-residents? I know there's a proposed, the law talks about 15% of their gain. It might be a challenge to determine what exactly is this gain. And what is likely to happen, as you said, the derivatives market in the country is quite small. So what is likely to happen is that the non-residents may want to push down this cost of tax to the residents. So the residents will end up with a higher cost of doing business. So as a rational person, you'll then be asking yourself, am I better off with a hedge or not because of this additional cost? And if for whatever reason they decide that they're not going to take the hedge, then again they risk that their profitability is going to be lower. If on the other side they take on the hedge, it means they have an additional cost of doing business from a tax perspective. So overall, it will be a loss for the businesses and also for the tax authority, because with the reduced profitability, even the taxes that are paid are lower.
Edna, help me understand this. The non-resident entities, aren't they already subject to tax in their jurisdictions?
Yes, they are.
So is this a tax on tax, or how will this work?
So the thinking is they are subject to tax in their own countries. But the thinking is they are deriving or accruing income from Kenya. So how can the Kenyan government also get a portion of tax from the activities that they're carrying out in Kenya?
I see. Let's try and make this a little practical. I'm an airline. I hedge on fuel prices. I'm a loss-making airline, name withheld. How will this new provision affect their operations?
So what that will mean is, if this airline makes a loss on the hedge, there is an assumption that there is somebody in the value chain that has made a gain. Whether or not this assumption holds is another story. So with the draft regulations, the expectation is that now this airline is supposed to account for 15% on the gain of the non-resident. The challenge is the airline will not be able to tell what the gain is, because you also have a number of intermediaries. And if, say, the airline entered into a transaction with a financial institution here in Kenya, it even complicates it further, because then there's somebody else in between. And it might not be possible for the financial institution to also find out what the gain of the non-resident is.
Do you see this triggering a significant risk of capital flight from Kenya?
What I see happening is that maybe not many businesses will then enter into financial derivatives contracts, which again is going to pose a challenge around profitability of their businesses.
Okay. And let's wrap up this conversation. Looking into 2023, what's your anticipated outlook, especially from a taxation standpoint?
So as I had earlier mentioned, the first expectation is that we are going to finalize on the draft national tax policy that was shared by the National Treasury with the public. Investors are in business for the long haul, and they need predictability and certainty. A national tax policy is going to help the investors make these long-term decisions. So I am hoping that we'll have the national tax policy finalized and released to taxpayers.
All right. Edna Tachu, thank you so much for your time.
Thank you for having me, Julians.
That takes us to the close of our conversation. Remember, we shall continue highlighting these issues around taxation as they roll. And the Treasury did invite comments for the Finance Bill 2023. I think the deadline already passed. That was the 16th of December. Let's see how that goes. We are told we should be seeing the supplementary budget by January 31st, 2023. So we shall keep you updated on all these developments.